Price doesn't move because of indicators. It moves to collect the liquidity. If you understand this, you will stop getting stopped out. In the last videos, we talked about market structure and order block. Today, I will show you the missing piece that connects everything, that is liquidity. Hello everyone and welcome to the new video. Today I want to explain a great things or the piece of the smart money strategy that it can change your trades, the results and everything. What is a liquidity? Liquidity is the concentration of buy and sell orders in specific price areas where many traders place their stop losses and pending orders. All of us we know that when we are trading in the smart money especially, we say that the order blocks, we say that the liquidities, we say that everything. So liquidity is that exact area that the most of the traders they put their stop loss in that area, and also the smart money traders they put their own orders in that area. So if we want to trade with the smart money, we should know how to identify those areas. We have so many kinds of the liquidity in the market. So today just I want to talk about four exact and four great liquidity areas that you can understand clearly on the chart and the real chart that you can understand, and I will explain those four liquidity area. So which kind of the liquidity we want to talk about today? Okay, here is the kinds of the liquidity that we want to talk about today. The first one is equal highs or equal lows, especially we can find around the support and resistance. I will show you in the real chart, and double bottom and double top that we can also find. I will show you in the real chart. Also the obvious trend lines, the trend line liquidity that we have, I will show you in the chart, and also the poorly chosen order blocks. This one is so important for the especially for smart money traders. So how poorly chosen order block, especially those order block that with no liquidity above or below them. So I will explain it for you in the real chart. Okay, the examples for equal high and equal low is here. Here we can see that clearly that there was the equal high. Why it is equal high? Because this high couldn't clean this high. So it is the equal high that the liquidity area that we can see clearly when the market comes down, and then the liquid this areas, then the market makes other equal low here. Why? Because this low couldn't clean this area, this previous low, so it is also the liquidity area. Then what happens? We can see clearly that the market comes up and clean these liquidities. They bought high that we had so many liquidity, so it could clean all of those liquidity, and then market comes down and clean all of liquidity that was in these areas, especially these two equal low that the market comes and clean all of these two. It was the equal high and equal low liquidity. Okay, and here is the double top and double bottom liquidity that I will show you. How we can see also that it looks like the previous one, that the double top, that most of the traders, especially the price action traders, they are trading with this, and this is that double bottom that most of the traders they trade with, and most of those who are trading with this, most of them they are putting their liquidity, their stop losses here and here, and those who are getting the trade from here, they are putting their stop loss around this area, and because we think that the market will increase from there and go up, so we will put our stop loss around this area, and we can see clearly that the market comes down and clean all of these areas. About the double bottom also, we can see that the market comes and clean all of the liquidity of those, and then the market comes down. So it was the second one. And the third one is obvious trend lines liquidity. So we will go with the trend line liquidity. And here is the trend lines examples liquidity, that we can see that the market make a trend line here, and most of all of the traders that they are trading with and they are putting their stop loss above the trend line. So all of this area was the liquidity area. What happens, market once break the trend line, that the most of traders they were opening their position from these areas and putting their stop loss in this area. But what happens, that the market comes down again, could clean these liquidities, and then the market increase. And what happens, market could clean all of this liquidity was around this trend line. So market is always trying to clean the liquidities. It was the third one. And the fourth one is that important one also, especially for the smart money traders, is this one. Choosing the wrong order block, we can say, or the poor order block. Before I go towards the explaining the fourth one, I want to tell you that in the next video I will explain the real pullback and the real change of character. So you can, if you have problem with this, you can watch the next video. Also, you can subscribe and to expect for the next video. So here we can see clearly that this order block was a great order block for us. Why? Because we can see that the market comes down and clean this liquidity area, that after that the market increase, and market could go and give us the break of structure. So this order block could clean the liquidity before itself, and also could give the break of structure. So it was a great order block. But what happens, that when the market comes down and market react from here, and then the market could break this order block. So market gave us here the change of character. Then what happens, we were expecting for the short trades, but most of the traders, especially those who are the new traders, their teachers says always, I saw time and again in the YouTube, and those who are the teachers, especially the new traders, they say that, or teacher says that when a high or a low breaks, that is confirmation to change of character, or that is the change of character. Most of the traders, they choose these areas for the change of character, or these areas a change of character. Why? Because they think that this previous high breaks, so it is a change of character, or this previous high break, it is a change of character. But you should know that it is not a change of character. So when they expect this change of character or this change of character, so they will expect that the market should comes down to this order block, and then they open their position from this area, and they are putting their stop loss around this area. So what happens, we can see clearly that like that position, then the market could break all of this liquidity, could clean the liquidity and break this area. So it is the fourth one, on the poor order block and the wrong order block, if we expect or if we choose it. Liquidity tells you when the market is ready for a big move, and the structure tells you the directions also, and order block give you the great entries. So if you like to trade like the smart money traders, and if you like to have the live trade with me, so don't forget to subscribe and watch the next video. Have a good time and a great trades.